Good morning. Good morning. Good morning. Good morning. Hi, welcome. Hi, Dipalok, Anuj, Anirudh, Abhishek, Chaitanya, Darshana, Dhiraj, Priya, Hosla, Ishpuri, Jitendra. Hi, welcome. Kavita, Kishore, Mahendra, Mandeep, Nitija, Pushpanjali, Rahul, Rashmi, Santosh, Sangita Paul, Suman Kumar Jha, Varsha, Virendra Singh, Yognesh, Lakkar. Hi, good morning, everyone. Super. Let's get started. So we will continue into the second part of this session on liquidity. All right. And so we have looked at what is liquidity, how liquidity determines the outcome in the markets, and so on. And today we are going to go a little deeper into this world of liquidity to find out what is the role that Reserve Bank of India plays in terms of determining liquidity and so on. Okay. So, ready? Shall we start? All right. Chalo, let's get started. Now, देखो, लेट मी आस्क यू समथिंग लेट मी चलो आज एक सवाल से शुरू करते हैं जब हम लोग when we start talking about repo rate, CRR, liquidity injection or OMO, okay, what does your brain tell you? क्या थोड़ा समझ में आता है kind of situation? Okay, what exactly do you start thinking? That yes, these are the terms that I am slightly familiar and I know a little bit around them. What does your brain tell you? Hmm? Karthikeyan says some effort is being made to manipulate money circulation in the economy. Okay. When you hear about the word CRR, when you hear about the word repo rate, what does your brain tell you? हाँ थोड़ा समझ में आता है kind of situation. Okay. All right. Okay. Slightly understand. Okay. So if RBI suddenly cuts interest rates tomorrow morning, can you clearly explain how that money actually travels through the system? Not any theory, but the actual flow. How many of you will be able to explain the actual flow of money if RBI cuts interest rates tomorrow morning? Theoretical नहीं चाहिए, but actual flow. How does it move from RBI to banks, then to businesses, to markets, and eventually to your client portfolio? How many of you think that when RBI is changing interest rates, eventually your client's portfolio will also undergo a change? Your client's portfolio will also undergo a change, and you have an ability to explain that in extremely simple terms, in extremely simple words. I'm asking you this not to pass any judgment, because this is where most advisors get exposed. हमको तो headlines पता है, we know the headlines, but we don't understand what is the mechanism that happens underneath these kind of decisions. And let me tell you something, if we don't understand liquidity, we will continue to get surprised by the markets. हम लोग हमेशा सोचते रहेंगे कि ये क्यों हुआ है. We will never be ahead of it. We will keep saying, हाँ मार्केट इतना ऊपर क्यों जा रहा है, न्यूज नेगेटिव थी फिर भी क्यों रैली हो रहा है, रिजल्ट्स अच्छे थे फिर भी मार्केट गिर क्यों रहा है. बिकॉज मार्केट्स डोंट मूव ओनली ऑन न्यूज, दे मूव ऑन, जैसे कल हमने देखा, बिकॉज ऑफ अवेलेबिलिटी ऑफ मनी. नाउ थिंक केयरफुली. कैन एन इकोनॉमी ग्रो if banks stop lending? Or can the markets keep rallying if liquidity dries up? Can the markets keep rallying if liquidity dries up? Or can businesses expand if borrowing becomes expensive? Answer is no, which means one invisible force quietly controls all of this. It controls consumption, it controls risk taking ability, it controls market optimism, it controls the borrowing, and eventually it also controls the asset prices. And that force is liquidity. And RBI controls the liquidity like as if they are controlling the flow of money. It is like the valve. जैसे हर एक पाइपलाइन में एक वाल्व होता है, वाल्व घुमाने से पानी ज्यादा आएगा या रुक जाएगा या कम हो जाएगा. And they do it not randomly or emotionally, they do it in a very, very systematic manner. So today's session is not about any complicated economics, as I keep saying. It is about finally understanding how money actually enters the system, how it leaves the system, and why this invisible movement changes everything in markets. Because once you understand liquidity, then you stop reacting to headlines. And then we understand what is the real mechanism which is functioning underneath this. Okay? Chaliye, let's get started. Give me 1 minute. I'm going to download the presentation deck and we are going to get started. Yes, I am ready. Let me know once this slide deck is visible. So how RBI controls the flow of money, the invisible mechanics behind markets and the economy. How RBI does it, how does it enter the system, how does it exit the system, and so on. The hidden plumbing. Okay? Chalo. So we know all these words. Repo rate, we understand. CRR, we understand. OMO, open market operations, we understand. Liquidity injections, etc. But most people hear the jargon, but never see the actual mechanisms underneath. Okay, today we will identify that exact movement. So RBI decides exactly how much money should enter into the system. Okay, through the banks. Banks are the distribution architecture. So RBI जब वो valve खोलता है वो पानी की तरह पैसा पहले liquidity enters into the banking system through the repo mechanism or the reverse repo mechanism. Either banks पैसा borrow करते हैं because RBI wants them to borrow, or they give back the excess money to the RBI because RBI wants them to give back the excess money to them. And businesses and consumers is finally where the entire flow of money lands up. RBI doesn't control the markets directly, but eventually it controls the flow of it controls the market because it controls the flow of liquidity, and this is to the money. So the first one is the repo rate. So repo rate is the rate at which banks borrow from RBI, right? It acts as the master interest rate. So when the valve tightens, that means the repo rate is going up, banks borrow at a higher cost. Moment banks are borrowing at a higher cost, that means the cost of money goes up. That means loans become expensive. EMIs rise, and moment EMIs rise, borrowing starts to slow down. That is the tightening when RBI is raising the interest rates. When they're dropping the interest rates, the repo rate falls, borrowings become cheaper, spending increases because you have more money with you, surplus money with you to spend, and liquidity eventually improves. The second one is the CRR. That is the rate at which RBI, all the banks give certain amount of money in the form of cash with Reserve Bank. Okay. So RBI says that CRR is the cash reserve ratio. That is the money that you have to necessarily keep it with me. Suppose आपके पास 100 रुपए डिपॉजिट में मिलता है, 4% CRR है. That means 4 रुपए आपको necessarily मेरे पास ही रखना पड़ेगा, किसी को लेंड नहीं कर सकते. So 100 will drop down to 96. वो 96 रुपीज आप लेंड कर सकते हो. उसके अंदर भी और भी SLR वगैरह है, मैं इतना डिटेल्स में नहीं जा रहा हूं, बट अगर आप 4% CRR है तो 100 रुपए आपका डिपॉजिट है, तो 4 रुपए आपको RBI के पास ही रखना पड़ेगा। ओके। अगर CRR बढ़ जाता है, अगर 4 की जगह पे 5 होता है, दैट मीन्स ओनली 95 रुपीज इज अवेलेबल फॉर लेंडिंग। 5 की जगह पे अगर 6 होता है, दैट मीन्स फर्दर लेंडिंग कम हो जाएगा। सो इफ द CRR इज हाई, systematic liquidity will reduce. And if the CRR is low, that means more money will be available to the banks to lend. Okay. So CRR actually controls the sheer volume of money that banks will release into, RBI will release into the banking system. The third one is the open market operations, OMO. As the name suggests, open market operation. RBI will directly buy bonds or directly sell bonds with the banks. बैंक के पास जो बॉन्ड्स है वो आरबीआई खरीदना चालू करेगा। अगर व्हेन दे आर बाइंग बॉन्ड्स, सो bonds will come out from the banking system and get into the RBI. So more liquidity will get into the hands of the banking system. That is open market operations, where they're injecting more money into the banking system. When RBI is selling more bonds, that means more bonds are moving from RBI to banks. And जैसे बेचेगा सामने से तो पैसा मिलेगा. If you are selling, that means you give bonds and you take liquidity. That money moves into from banks to the government, to RBI. So when RBI is buying bonds, you're injecting more money into the system. And RBI is selling bonds, that means you are removing more money from the system. Now, how does this flow of action happens? So what is this easing versus the tightening part? When RBI is easing, okay, so when RBI eases, whether they're easing the repo rate, they're easing the CRR, or they're buying more bonds, so RBI is in a easing mode. Okay, so banks are lending more. The more money is available to the banks flow, spending rises, markets move, and so on. The tightening part, the RBI tightens, so their lending slows down, money tightens, growth slows down, and overall the market struggles during those situations. So how does it look? The lending behavior. When it's high liquidity, so banks lend aggressively. So there is, and the opposite of that is tightening liquidity. So lending strictly slows down. Okay. Risk tolerance, overall risk appetite. High liquidity case में risk tolerance increases. लोगों के पास पैसा है. So people will be happy to take more bets. When it is tight liquidity, it is caution, the more caution. Market impact, during high liquidity, markets get support. Valuations come under pressure during tight liquidity conditions. Then, who are the people who are going to respond first? If banks suddenly stop lending aggressively, which are the sectors which get affected first? We have discussed this in a few times in the past. The first sector that comes under pressure is the real estate. So these are the companies which are highly dependent on massive capital flow. देखो याद रखिए, जो भी हम लोग घर खरीदते हैं, the most of the time we actually borrow money to buy houses. Very rarely, a very small percentage of people will do 100% cash down to buy houses, completely check me. So real estate is highly dependent on this capital flow and EMI and interest rates. Then comes cars. Most of the time, cars also get bought because of interest, loans. And this medium and small medium enterprises. Okay. They're also relying on a constant working capital. So these are the set of companies also which struggle during tight liquidity conditions. So the liquidity affects behavior before it actually affects data. Remember, step one, when loans become cheaper, okay, consumer confidence surges. When consumer confidence surges, spending accelerates and investing and risk-taking multiply. So an RBI rate cut instantly benefits asset classes because it changes human psychology. And once the human psychology and behavior changes, the earnings and the demand will also follow. Okay. Now, how do we speak with our clients during such situations? We should, as I keep saying, we should always upgrade the level of conversation that we have with our clients. Okay. Amateurish way of talking is that RBI ने पैसा डाला market में. Professional way of taking up it is RBI is easing all liquidity conditions. Banks aggressively loan दे रहा है. Systematic liquidity is supportive. Market में liquidity है. Financial conditions are accommodative. So the ultimate driver of markets don't move purely because businesses improve. They move because money becomes available, borrowings becomes easier, and risk-taking increases. RBI controls the economy not by force, but by controlling the flow of money. All the best, everyone. Have a fantastic day ahead. We will move deeper into this world of liquidity tomorrow in the part 3 of this 5-part series. All the best. Have a great day ahead and see you tomorrow at 10:10. Bye-bye.